Stocks lower again today, plunging again after one of the worst weeks for the market of the year. Technically, all the major indices began right on the cliff of key support points. Many, in fact, wondering what happened to the buy on dips crowd and why the bargain hunters have yet to materialize. Joining me now for some key answers here, Kevin Kelly, managing partner at Kelly & Company, David Dietz, president of Point View, and Robert Lunar, CEO of SureVest. Robert, let me start with you. A lot of chatter now. Hey, you know, the buy on dips crowd seems to have gone away. That might be the final sign that the bull market is over. And certainly, without a doubt, you know, we see few people argue that many stocks are oversold, but no one seems to want to make the first move anymore.
Yeah, no, I agree, Charles. I mean, we've just been in a funnel of bad news, whether it's France or China, India, central bank governor leaving yesterday. There's a ton of bad news out there. And when you look at the technicals, because nobody can make sense of this market, they're looking to the charts right now. If you even look intraday today, the bounce we got came off of the closing low that we experienced back in February. Nobody really knows what to make of this right now. Until we can get some stability, I don't think we're going to see the real money pour in. But, you know, if you're a long-term investor, this type of bad news environment is really where I think you need to be dipping a toe into the water here. Even that,
David, is interesting because the other low we were supposed to hold was the October low. So I guess we'll look at the February low, and if that doesn't hold, hey, remember that 2015 low? But there is a sense that there's value out there, and just everyone's kind of waiting for someone else to make the first big move.
Yeah, I think that's right. I mean, I'm bullish here. I believe stock prices will be higher by the end of the year. I think we've got a very strong economy. We've got the tax cuts in place. We've got the lowest unemployment rate in 49 years. But the question is leadership at the top. And I think it comes right down to, frankly, the Federal Reserve got us off on the wrong track at the beginning of October, saying we are a long way from neutral. Now they've retreated a little bit. We need to hear a strong statement from them following the FOMC meeting as to what exactly they're going to do with monetary policy. I think that's what we need to get people back into the pool.
Yeah, I think the buy the dip crowd has left because they haven't gotten confirmation from the data. The data has gotten considerably weaker time and time again. So David brought up the Fed, right? One of their key indicators that they look at is the PCE deflator, right? That's the true form of inflation. If we go back a year, it's at 1.8%. But the last quarter, the last 3 months, it's at 1.2%. That's significantly low. That's a huge sell-off on inflation. So what are the underpinnings? Why is it not going up again if we're in such a strong, healthy economy? And then we saw data from China, the second largest economy, right, considerably weak today. So the buy the dip crowd is gone, especially in a tightening market. And we're seeing it. The credit markets are leading the equity markets, and that's the problem. The buy the dip crowd won't come back until they get confirmation from the data.
Although, Robert, part of that buying the dips before was a belief that, you know, whatever temporarily was pushing the market lower was going to reverse itself. So you had to have some sort of belief that things were going to get better, and you wanted to get in ahead of that news.
Yeah, and I agree, Charles. It's just, you know, like the other guests are saying, you know, the markets are a leading indicator, and we've seen the markets pulling back for quite a while now. And when you look at the data hasn't been extremely compelling. That being said, at some point, you're going to reach a bottom. So we're looking and talking about China slowing down. Well, China's markets are down over 20%. If you look at some of our stocks that are leading the market today, names like Salesforce, Amazon, these names are down over 20%. So again, as a long-term investor, if you're waiting for someone to ring a bell at the bottom and say the good news is all good, that's not going to happen. So I think, you know, these types of declines are, again, where you've got to step in, things you got to look at, and you got to turn off this news when you start hearing about things like the death cross. You know, this is making people panic right now, and these are the types of things that are going to keep people on the sidelines.
Just so people know, the death cross is when the 50-day moving average goes below the 200-day moving average, is what happened with the S&P on Friday. So this morning, when the market was showing a little bit of communication services, consumer discretionary, and technology were briefly higher. And it's, to Robert's point, it was the names that we all kind of know. Facebook, Amazon, the chip names being led by Qualcomm and the Apple News. I guess when it's all said and done, David, when the dust settles, does it have to be those same leadership names?
I don't think it has to be. I think some of those got too far overvalued. I do believe that we are in a secular boom in technology. I think there are standout names, some of the legacy techs. For example, Intel is one that we're buying today. Applied Materials is another one that makes all the chip equipment used to make semiconductors. So those are ideas that we have.
You buying anything today? I saw your ProLogics pop the other day, by the way.
Yeah, ProLogics did pop,
What
right?
else you like?
So sticking in those real estate names, right? Go to American Tower, right? They're the ones that are building out the 5G network. So AMT is the name because Verizon and AT&T are going to always pay their monthly rent to those guys.
All right, gentlemen, I got to leave it there. Kevin, Robert, and David, thank you all very much.